Rishi, it's good to have you back. First, you're just telling me in the break that the portfolio has not done exceedingly well, but that could also be attributed to market volatility and what's happening to the broader market.
Right.
So to make it simple, what has been the return in last 1 month and what has worked for you and what has not worked for you?
So, like you correctly said, I mean, there has been a big divergence in the market over the last month where some large caps have done exceedingly well while the broader market has languished. So in line with that, because most of our stocks were either mid caps or larger stocks like BHEL, which are not right now in favor and more like turnaround stories. So therefore that portfolio has not done too well over the last month. Since last time I was on air, it's down on average about 1%, while the markets are up around 3 to 4%. But obviously, it's early days, and like I said, those stocks have those characteristics which have been dragged down over the last month. What has worked is Escorts, iShares, consistent growth stories. We mentioned about iShares last time. We can discuss Escorts today. Those have continued to do well. Things like BHEL has performed the worst, again being out of favor. That can easily happen. But like I said last time, that the risk reward is really favorable in that stock, where downside is 15-20% and upside can easily be a 2x kind of thing. So those are the ones where you need to be patient, and at some point over the next year, the once it starts giving some movement, it can be very sharp at some point. Something I'm introducing this time is Asian Paints. So that's the 6th stock, and weightage wise, I would say iShares and BHEL I would reduce to a 15% weight each, while the rest could continue to be 20%, and the new addition again comes in at whatever the balance is. So that would be the weightage changes and the stock change. I think from last time we have Escorts, Sadbhav, and now Asian Paints, which we haven't discussed, so we can do that.
While there's no denying the growth story in Asian paints, or for that matter the entire paint sector, as the rural economy also now begins to pick up, but are you not a little worried about the fact that Asian paints you're buying at its almost year high, and the fact that valuations are a concern when it comes to, I mean, Asian paints is the leader in the entire paint sector. Right. So is that not a concern, the valuation?
Yes, so it has been a concern honestly over the last year and a half for us. But if you see the stock price performance, then both absolute and relative to the market, it's virtually done. I mean, absolute wise, it's done nothing over the last 1.5 years. It's been flattish with a plus minus 10-15% move. And on a relative basis, it's hugely underperformed the market. So I think to that extent, because of the valuation concerns and some normalization in earnings that happened, it has already played out in the price. If you look at it currently, then what is interesting is obviously since GST, the company didn't really have pricing power. There was inflationary cost build up, which couldn't get offset, by the pricing increase that typically a company like Asian Paints can do. But that's returning. There have been price increases recently, and it looks like that can continue going forward. On the volume growth side, again, there's been better volume growth than the market expected, even the most optimistic estimates expected over the last few quarters. And again, volume in paints, as we know, is closely correlated to the GDP. Yeah. And as GDP is, giving more clarity of increasing, that will reflect in the volume growth going further as well. Finally, it's a big play on the unorganized to organized, sort of theme that has built up since demonetization and GST. And as a result of all of these, if you look at the earnings, then over the next 2-3 years, it can easily grow at a 25 to 30% earnings growth, along with some margin expansion. So factors like that typically end up playing out well for a stock, especially when it's hugely underperformed in the last 1 to 2 years.
Right. Before I go to technical analyst to take more trading ideas, Rishi, what is making you so bullish on BHEL? And since when you are bullish on BHEL, because most of the broking firms or most of the analysts which we talk, they are either negative, neutral, or have accumulate rating. But this seemed to be a contra bet, because stock actually has not performed so very well since many years.
Right. So that's exactly the point, that the stock hasn't done anything. And from a longer term technical perspective, if I talk about it before coming to the fundamentals, it's almost like the stock has a very low downside, like a 10% kind of downside. And like I was saying earlier, that once it starts moving, it can easily have a 2x. And at some point over the next year, I expect that to play out, because there are a lot of factors where, their debtors had been high. Now that recovery started happening. If you take the debtor plus cash as a percentage of the market cap, that's a very high number, something like 120%. So there are lots of these factors which are showing initial signs of recovering, and these are basically can have a big impact on the stock because it's almost like financial leverage, operating leverage collectively kicking in, which was the same case for something like Jindal Steel and Power a year and a half back. So a year and a half back, again it was out of favor and it came up on our radar for the same reasons. And something similar is playing out in BHEL, given the problems in the power sector, because BHEL is more a pure power story compared to a JSPL. It is taking longer, but probably the same outcome should be expected in some time.
Okay, so that's a kind of a contra call, both from technical as well as fundamental perspective. Rishi is quite optimistic on BHEL and is holding 15% in his portfolio when it comes to this laggard stock.
Sun TV is up 11%. But on the other side, if I look at Tata Global Beverages, it's down 10%. The common theme here is both are reacting to numbers. One on the extreme high side, other one on the extreme low side. Rishi, I'm just, I'm going back to your portfolio, but I'm tempted to ask you about something like HUL. Why have you not included HUL and why have you included Asian Paints?
So like I said, HUL has actually been performing strongly already. So the risk reward when you compare the two, while on many other parameters like earnings growth, margins, this, that, it may be pretty similar. But the fact that Asian Paints has been underperforming and now some of the triggers are falling in place makes it a better bet as of now. HUL kind of stocks, obviously they can continue to be safe bets, but at this point in time, Asian Paints is looking more attractive.
How come IT has not come as part of your portfolio? Because last time when we met, markets are a bit tentative about कौन IT company क्या guidance देगी. Now there is a rupee tailwind, there is a air of optimism in the air. We've got a formation of $100 billion company in form of TCS. Suddenly the narrative around IT has changed, but you've not included IT in your portfolio after the numbers.
So, broadly IT may come in over time. The idea was to, gradually introduce stocks into the portfolio. So it may come in, but again, on a relative basis, whatever was looking interesting at this point in time has got added, especially given that recently the last 2-3 months have been great for IT. So there may be a point where, the relative risk reward looks much better, at which point we'll include it.
Okay, so IT would wait, but definitely, HUL is not preferred at this point of time. Asian Paints is something which Rishi is liking and it's part of his portfolio.